As we just mentioned in the previous video, let's take a look at some different types of planning and savings concepts available to you compared to what we call internal savings.
In interviewing financial professionals, you're looking for someone who could best fulfill your financial needs. First, the investment fund.
We call it IF.
These salespeople say you could earn $6,000 in one of their accounts. To do so, you just have to deposit $80,000 into the account. Unfortunately, you'd have to pay capital gains tax on the growth, and you'd end up with a net earning of around $4,800.
There may also be advisory fees and account fees based upon your account balances and the type of account it is, all of which go against that net rate of return even further.
Now let's talk about option 2. Banks also want your business, so they introduce you to their bank savings programs,
Which we call BS.
The bank says it too could get you a $6,000 return. All you'd have to do is put $150,000 into their handy CD account.
Hate to be a pessimist here, but of course you would have to pay taxes on your gains there also, leaving you with about $4,800. There may also be some fees charged annually to maintain this account, in addition to penalties if you want or need to withdraw some of that money before its maturity date.
Okay, let's talk about option 3. We come along and tell you about internal savings.
We call it IS.
Thanks, Kelly. We teach you about transfers that you unknowingly and unnecessarily make every day, and we say, too, that you can get a $6,000 return.
The big difference is this: you don't need to deposit any money in any account. Even more rewarding, there will be no tax on your gain and no fees or penalties involved.
And finally, the sledgehammer. This is the only program where the full $6,000 is guaranteed. Now ask yourself, do you want your financial future based on if, BS, or something you know is going to happen?
Boy, that's cheesy, but it's good. Here's an example. Let's take someone earning $100,000 a year and saving 8%, or $8,000 of that income. First, congratulate them because they are doing far better than the national average.
They would have $92,000 in residual income to pay all of their bills and taxes. If this person could internally save 1% of that $92,000,
which is $920 extra per year.
That's right. They would create an 11.5% increase on their $8,000 in savings.
No fees, no penalties, and without spending one more dime out of their pocket. And with how much more risk?
Absolutely none, because they simply became more efficient and eliminated $920 in transfers.
So it begs the question, if you found $920 in transfers that before were going to another entity, but now you have use and control of it, would you save it?
Look, it's not about your budget or spending less. It's about the efficiency of money. We'll be happy to discuss this with you in person, over the phone, or the computer.
We'll even do it all for free, as many meetings as it takes. Make sure to watch our Who We Are video. That's what we give you. We just ask that in return, you will be willing to find those transfers and have the discussions.
This is Financial Caffeine.
Income planning. Effective, efficient strategies for both the accumulation and distribution phases without the downside risk. It's what you need and deserve.